You are not going to believe what just happened in the silver market. In the last few hours, something broke. Not a small dip, not a normal correction. I mean a complete structural breakdown. Prices didn't just drop. They collapsed in a way that traders with 30 years of experience have never seen before. We're talking about a flash crash that triggered circuit breakers on multiple exchanges, and now the next 72 hours are going to decide whether this is the beginning of a total reset or the biggest wealth transfer of our lifetime. My name is not important, but the information I'm about to share with you is critical if you own any silver, gold, or even cash. This is Shadow Wealth, and if you want to stay ahead of moves that most people only understand after it's too late, hit that like button right now and subscribe to the channel. Because what I'm going to lay out in the next few minutes will not be on the evening news, at least not until the damage is already done. Let me take you back to exactly what happened. Around 2 hours before this recording, the spot price of silver was trading in what most analysts called a stable range. Nothing unusual. Then, without any major headline or economic data release, the price began to accelerate downward. At first, algorithms kicked in to buy the dip, that's normal. But this time, the buying never came. Instead, sell orders flooded the market from multiple sources at once. Within 15 minutes, silver lost more than 12% of its value. The exchange halted trading twice. When it reopened, the selling was even more aggressive. By the time the dust settled temporarily, silver had fallen over 18% from its previous close. That is not a correction. That is a crash. And the reason why this matters more than a stock market crash is simple. Silver is not just a metal, it is industrial, it is monetary, and it is one of the most manipulated markets on Earth. When a heavily manipulated market suddenly breaks, the real story is always hidden beneath the surface. So what actually caused this? Based on the data coming out of the COMEX and the London bullion market, there are 3 credible theories right now. The first is that a major bank got caught in a losing short position. You see, for years, large financial institutions have been selling paper silver contracts that they don't physically own. It's a fractional reserve system. They sell promises, not metal. But someone, or some entity, decided to force a delivery. And when that happened, the bank realized they didn't have enough physical silver to back their contracts. So they panicked. They started selling even more paper silver to raise cash, which crashed the price. That is a death spiral. The second theory is even more disturbing. Some sources inside the trading pits are whispering that a central bank, yes, a central bank, sold a massive amount of silver futures to defend their currency. We've seen this with gold before, but never with silver on this scale. And the third theory, which I personally think has the most weight, is that a large hedge fund got margin called on a different asset, maybe bonds or real estate, and they were forced to liquidate their silver holdings in the most aggressive way possible. Whatever the reason, the result is the same. The paper price of silver is now completely disconnected from the physical reality, and here is where the next 72 hours become absolutely critical. You see, when the paper price crashes like this, one of 2 things happens. Either the physical market follows the paper price down, which would be a disaster for miners and investors, or the physical market does the opposite. It tightens, and right now, all the evidence points to the second outcome. Because while the futures price was imploding, something strange happened at the retail level. Dealers like APMEX, SD Bullion, and even local coin shops started raising their premiums, not lowering them. That means that despite the crash on screen, real people with real money were still buying physical silver. In some cases, they were buying more. By the time the market closed for the day, several major online dealers had reported wait times of over 2 weeks for popular products like Silver Eagles and 10-ounce bars. That is not a sign of a dying market. That is a sign of a market that is about to snap. Now I want you to imagine what happens over the next 72 hours, hour by hour. First 24 hours. We are in right now. The headlines will scream that silver is crashing. Financial media will bring on talking heads to say that precious metals are dead, that crypto is the only real hedge, that you should sell everything and move to cash. This is what they always do. But here at Shadow Wealth, we look at what is actually happening, not what people are saying. In the first 24 hours, smart money will be accumulating quietly. Not through futures, not through ETFs, but through physical delivery. The second 24 hours, things get interesting. As the Asian markets open, we will see if the physical buying pressure from China and India holds up. Those two countries alone consume over half of the world's silver supply every year. If they step in, expect premiums to explode even higher. And if the wholesale market in London starts reporting delivery delays, that is the moment the official narrative begins to crack. By the third 24 hours, we are at the 72-hour mark. That is when the COMEX futures contracts start to expire for the next month. And if the number of delivery notices spikes, which many insiders are predicting it will, then the paper shorts are in real trouble. They will have to either buy back their contracts at a huge loss or deliver metal they don't have. Either way, the price could violently reverse to the upside faster than anyone can react. But let me stop here and address the most important question you probably have right now. What should you do? And I want to be very clear. I am not a financial advisor. This is not buy or sell advice. This is information from Shadow Wealth so that you can make your own educated decisions. That said, history gives us a very clear blueprint for situations like this. In 2020, when the silver market had a smaller but similar breakdown, the paper price dropped dramatically, and then within 6 months it more than doubled. In 2011, a similar pattern led to silver hitting almost $50 an ounce. But this time, the circumstances are much more extreme. We have record global debt, central banks that cannot raise interest rates without breaking their own economies, and an industrial demand for silver from solar panels, electric vehicles, and 5G technology that is higher than ever before. So when you combine a manipulated paper crash with a historic physical shortage, the only logical conclusion is that the current low price is a trap for anyone who sells their silver in fear right now. Now I need to talk about the role of leverage because this is where most people get destroyed. If you are trading silver on margin, meaning borrowed money, the next 72 hours could be brutal. The volatility is going to be extreme. We could see 20% swings in a single day. And if you are on the wrong side of those swings, your broker will liquidate you without mercy. That is not speculation. That is how leverage works. So if you are in that situation, you need to make some tough decisions immediately. On the other hand, if you own physical silver that you have already paid for, you are in a completely different position. You do not have to do anything. You can simply wait. And waiting has historically been the most profitable strategy in these moments. The people who panic sold during the 2020 crash missed out on a 100% gain. The people who panic sold in 2015 missed out on an 80% gain. Fear is the enemy of wealth. And right now, fear is being weaponized to get you to hand over your silver to those who understand what is really happening. But let me go even deeper. Because the next 72 hours are not just about silver. They are about the entire monetary system. You see, what broke today was not just a commodity price. It was the illusion that markets are always rational and always reflect reality. When a paper market crashes while the physical market tightens, that is a sign of a much larger sickness. It is a sign that the pricing mechanism itself has failed. And when that happens, the only true price is the one you can get in a hand-to-hand transaction. So over the next 3 days, watch the spreads. Watch the difference between the futures price and what you actually have to pay to take delivery of a 1-ounce coin. If that spread widens to 20%, 30%, or even 50%, which has happened in past dislocations, then you will know that the market has truly broken. And at that point, the central banks will have to step in. But here is the irony. The central banks are the ones who created this mess with years of money printing and interest rate suppression. They cannot solve a problem that they are the root cause of. Now I want to give you a few specific things to watch in the next 72 hours that the mainstream media will not tell you. Number 1, watch the commercial trader report. It comes out every Friday, but the preliminary numbers often leak earlier. If you see that the large commercial shorts have covered their positions aggressively, that means they know something bad is coming. Number 2, watch the lease rates for silver in London. When lease rates spike, it means that no one wants to lend their physical metal, which is a huge red flag. Number 3, watch the ratio of gold to silver. Right now, that ratio is at historic extremes. If it starts to narrow sharply, that is often a sign that silver is about to catch up to gold in a violent move. And number 4, watch the options market, specifically the put-call ratio. If you see a massive wall of put options expiring soon, Market makers may be forced to hedge in ways that drive prices even lower in the short term. That is a manipulative move, but it happens. And if you understand it, you can avoid being the exit liquidity. I also want to address the psychological side of what you are feeling right now. If you own silver, you probably feel a mix of fear, confusion, and maybe even regret. That is normal. But let me tell you what the smartest investors in history have in common. They do not make decisions based on emotion. They make decisions based on probability and time. And the probability right now, based on every historical precedent and every supply-demand indicator, is that this crash is a false signal. It is a liquidity event. It is a panic. And panic always reverses. The question is not whether silver will recover. The question is how fast and how high. And if you sell now, you will lock in a loss that could have been a gain. That is not investing. That is donating your wealth to the people who created this crash in the first place. Let me share a story that sums up this entire situation. In the early 2000s, there was a famous silver analyst who told his subscribers to buy physical silver at around $4 or $5 an ounce. For years, the price went nowhere. People laughed at him. Then in 2008, during the financial crisis, silver crashed along with everything else. It went from over $20 down to under $9. His subscribers were terrified. Many sold, but the ones who held on, and even bought more at those low prices, eventually saw silver go to almost $50 just 3 years later. The point is not to predict the exact bottom. The point is to understand that when a market breaks like this, the opportunity is not in selling. The opportunity is in surviving the volatility and letting time do the work. And right now, time is on the side of physical silver owners. It is not on the side of the banks that sold billions of dollars worth of paper silver they cannot deliver. So where does Shadow Wealth stand on all of this? We stand with the facts. And the facts are that the world consumes more silver every year than it mines. That deficit has been growing for 5 consecutive years. Above-ground inventories are at the lowest level in decades. And industrial demand is about to explode due to the green energy transition. Those are not opinions. Those are numbers from the Silver Institute and the U.S. Geological Survey. So when a paper market crashes, but the underlying fundamentals are the strongest they have ever been, you have to ask yourself a simple question: who is selling and why? The answer is almost always the same. Someone with deep pockets is trying to scare you into giving up your assets. And once you do, they will buy them at a discount, and then they will ride the inevitable wave back up. That is how wealth is transferred from the fearful to the informed. Now, before I wrap up, I need to give you a few actionable steps for the next 72 hours. First, do not make any rush decisions. The worst trades are the ones made in panic. Second, if you have been thinking about adding to your silver position, do not try to catch the exact bottom. Instead, consider dollar cost averaging in over the next few days. Third, stay away from paper silver products like ETFs and futures unless you fully understand the counterparty risk. In a broken market, those products can diverge from physical in ways that destroy value. Fourth, keep some dry powder, meaning cash, because if the price goes even lower, you want to be able to take advantage. And fifth, stay informed through sources that actually understand the physical market, not the headline noise. That is why I created Shadow Wealth, to cut through the noise and give you the signal. As we move into the next 72 hours, expect more volatility. Expect more headlines designed to scare you. Expect social media to be full of people claiming they saw this coming and that you should have sold. Ignore them. Most of those people do not even own silver. They are just spectators. The real action is happening in the vaults, in the refineries, and on the trading desks of the few institutions that understand the game. And the game is simple. Create fear, buy the dip, then sell to the latecomers when the price recovers. Do not be the latecomer. Be the one who held while others panicked. I also want to address the elephant in the room. Could the price go lower from here? Yes, absolutely. In a broken market, anything is possible. We could see another 10 or 15% drop if more forced selling occurs. But remember, price and value are not the same thing. The price is what the paper market says today. The value is what the physical market will demand when the paper market fails. And that day is coming much faster than most people realize. The 72-hour window we are in right now is likely the beginning of that failure, not the end. So whether you are a long-term investor, a stacker, or just someone who wants to protect their savings, the key is to stay calm, stay focused, and stay informed. Before I let you go, I want to ask you something. What do you think is going to happen to silver in the next 72 hours? Do you think this crash is the start of a major bear market? Or do you think it is the final shakeout before a historic rally? I want to hear your take. Post your thoughts in the comments below. And if you found this video helpful, do me a favor. Share it with someone who owns silver or gold. Share it with someone who is probably panicking right now. Share it with anyone who needs to hear the truth about what is really happening. Because the more people understand this dynamic, the less power the manipulators have. And of course, if you have not already, make sure you are subscribed to Shadow Wealth with notifications on. We are going to be monitoring this situation every single day, and when the next big move happens, you will hear it here first. Until then, stay sharp, stay grounded, and remember that in the world of wealth, the patient always win. This is Shadow Wealth, signing off.